In the short term, yeah, I kind of think so. But in the long term, it's difficult to say. What's up, everybody? My name is Ale, and welcome to my world of stocks. Now, when looking at NIO stock, I do think that it's a falling knife at this moment as it continues to crash. And a lot of you have been almost begging me to do an update on the stock because they recently announced earnings. There's a few updates with the company, and a lot of you also want to know how my little kind of speculative position is doing and how it's affecting my portfolio. But I'll address those questions about my personal position at the end of the video, because first I want to talk about their earnings and the company and the stock and where I think everything is headed. By the way, please consider hitting the like button if you enjoyed this video and you want to see more updates on individual stocks that continue to crash, and I'll be sure to make those videos for you guys. Alright, now taking a look at those Q1 earnings, I would say that they were in fact bad, but maybe not as bad as Wall Street was expecting. In fact, their stock had actually shot up by as much as 7% when those earnings came out, before slowly dropping back down and then crashing very hard in the days to follow. In fact, they're already down over 20% in the past week and over 50% in this past year in 2019, as more and more bears and short sellers continue to take control of the stock, which continuously gets notable downgrades from analysts like Bank of America, who recently lowered their price target to as little as $3 a share after those earnings. But this is despite the fact that NIO actually beat both top and bottom line expectations, beating analysts' EPS targets by 13 cents and revenue by double digits at over 12%. Still, the stronger performance wasn't enough to impress investors, given that the company continues to lose a ton of money, vehicle deliveries are dropping quarter over quarter, and guidance is suggesting that results will get even worse in the second quarter, which is the one that we're currently in right now. Now, taking a closer look at their financials, I made this chart here to show you guys their revenue by quarter, and again, this is a company that only recently started selling their vehicles a couple quarters ago, but you can see that they had a big surge in Q4 sales before dropping by over 50% in Q1. And if you ask NIO why this is happening, they would argue that there was a surge in sales at the end of last year because the EV subsidies were going to be cut, and it was also seasonally the best time for auto sales in China, while the first quarter had the exact opposite effect, and it was combined with the weakening Chinese economy that continues to get worse because of the US-China trade war. To be fair, those are actually some pretty valid arguments, as you can see here that the Chinese economy continues to struggle in their GDP annual growth rates as they continuously go down, and the trade war is absolutely getting worse and worse, at least at the time of this recording, and the Chinese automotive industry is still very seasonal, as you can see here that it always peaks at the end of the year before falling off a cliff right after. Now, there is technically a steep recovery right after the crash, but then it continues to drop into the middle of the year, and it's really not until you get closer to the end of the year that you see sales fully recover and take off again. So it might be safe to assume that if NIO is currently stuck in this seasonally weak period right now, then you can't really expect anything to get better until at least the third and fourth quarters, but that's even if NIO can actually improve on a few different aspects. Namely, the lack of profitability is something that continues to weigh on the stock, since they have now lost another $390 million in this last quarter. To be fair, that's actually a little better than the two previous quarters, including the last one where they actually had higher sales, but you have to keep in mind that they only did about $243 million in sales this quarter, so they're actually losing a lot more money than they're even bringing in their sales, which is obviously a very big concern. Now, you could make the argument that the company hasn't even been selling their mass market vehicles for a full year yet, so it's crazy to expect profitability at this early stage, but the losses are there nonetheless, and both investors and analysts are very unhappy about the situation as it continues to weigh on their balance sheet. Speaking of which, I made this chart here to show the balance sheet for the previous quarter versus this latest one, and you can see a couple of small changes. Cash did increase a bit, but current assets also decreased a little, and while it's still enough to cover their current liabilities, it's not enough to cover both their current liabilities and their long-term debt, which, by the way, their long-term debt increased to almost $1 billion, while their total liabilities increased by over $1 billion as well. In any case, their current and total ratios are still pretty reasonable at this time, but again, you have to keep in mind that this is a company that continues to lose hundreds of millions of dollars every single quarter. A big reason why is that sales just aren't large enough to where they can benefit from the economies of scale. In the previous quarter, their high deliveries actually helped them achieve a positive vehicle margin of 3.7%, while this latest quarter saw it drop to negative 7.2%, meaning that they are literally losing money on every vehicle they sell, which of course ends up weighing even more on their balance sheet. To be fair, they did announce a new investment deal that will raise funds for them, but we'll talk more about that in just a second, a little later in the video, because first I want to address those vehicle deliveries. Now, in the last 3 quarters of last year, deliveries were surging before dropping back down at the start of this year, and again, I think at least some of that can be attributed to the seasonality of the industry, and on a small positive note, it looks like those deliveries were actually higher than what management was expecting by almost a double-digit surprise of about 9.3%. But what's really alarming is that they expect deliveries to be even lower this second quarter versus the first one, which was already very low. As far as the reasons for that weakness, they noted increased competition as well as the automotive sector being weak in China, which they claim saw vehicle sales drop by 15% year over year from the January to April time period, not to mention that the whole trade war continues to add pressure to their economy. So not only do you have a situation in China where this is seasonally the weakest time period for auto sales, but you also have a 15% drop year over year during the same exact time period, so it's kind of a double whammy. Obviously, this is not good news for NIO, as it's already showing in their April deliveries that came in even lower than the previous months, this time dropping to as little as 1,124 deliveries for the month, which they attributed to EV subsidy cuts being announced in late March, right before April. February was technically lower, but that was also due to a Chinese holiday. In any case, based on all this data, it looks like NIO is absolutely struggling here, at least in the short term. Now, you might remember in my previous video, I made a prediction, kind of a small prediction, that Wall Street analysts would pretend like they didn't see this very bad quarter coming, even though we already knew vehicle deliveries well before earnings. But I kind of predicted that they would still downgrade the stock after, and it would send the stock even lower. In fact, here's a small clip of that. You know, Wall Street always likes to pretend like they don't see things coming and they're like, oh, what, it's that bad? Oh, we're shocked, you know, but in reality, it's like they knew it was coming. But I just have a feeling that that's going to kind of be the scenario with NIO's Q1 earnings. I feel like Wall Street will pretend like they didn't see it coming, and then the stock will just kind of sell off and it'll go down lower. So I am kind of anticipating that the stock will go lower in the short term, but at this point, it is what it is. NIO gave us some pretty weak guidance, and that made things even worse. So right now, the stock is a falling knife, and I just don't really see any positive catalyst to kind of help the bleeding stop. At least not in the short term, but looking out into the end of the year and more into the long term, I do think that there are possibly some positive catalysts that could help the stock recover, but let's just kind of quickly run through some of those. Okay, first off, we have to mention the obvious, and that's that NIO has multiple other models that it's currently working on that are probably taking some attention and of course some sales away from their older ES8 SUV. Still, the ES8 continues to sell at a pretty attractive price of around 448,000 yuan, while the Tesla Model X is almost 75% more expensive at 778,000 yuan, and that's after their most recent price cut in March from as much as 950,000 yuan. I'm not saying that the ES8 is a better vehicle than the Tesla, but there are a lot of similarities. However, what's even more important is that NIO is launching a newer version of the ES8 and a brand new SUV called the ES6 that is smaller and cheaper. This one will sell for about 100,000 yuan less than the ES8, and it still has a dual motor even at the standard version price of 358,000 yuan. Now, to be fair, Tesla is also launching the China-made Model 3 for only 328,000 yuan at the cheapest price, so about 30,000 yuan less than the NIO, or about 8% cheaper. But again, that's a sedan versus an SUV, and it's a single motor versus a dual motor, so there are some notable differences, but still I think the Model 3 will be extremely competitive to NIO, and even more so when they eventually launch the Model Y. But when looking at NIO's ES6, they already have over 12,000 pre-orders, with over 5,000 of those coming in just the last 5.5 weeks. And for context, they only did around 1,100 deliveries last month. So if the ES6 launches successfully in the second half of June, we could be talking about thousands of more deliveries per quarter and maybe even per month based on the current pre-order rate. Not to mention that they're also working on a new sedan called the ET7 that is part of their new ET series that will feature the NIO Platform 2.0 with level 4 autonomous driving, which is pretty much full-on autonomy. And that would mean that NIO will be offering both SUVs and sedans, which are the two best-selling categories in China. Now, there's still no word on when that will release because they mentioned in their conference call that they want to build it in their own brand new facility, but in the meantime, they want to keep releasing new models, so they plan on leveraging their existing platforms and technologies from the ES8 and ES6 to release an even more efficient brand new model next year. Obviously, this would cost a lot of money, which NIO is running very short on, but there does appear to be a framework agreement between NIO and a Chinese investment company called E-Town Capital, who, if approved, will invest around $1.5 billion, and part of the agreement is to help NIO build a brand new manufacturing facility that they will use to make those newer, more advanced vehicles. Now, looking even further than that, there's very little doubt in my mind that electric vehicles are the future, and even more so in China. Despite fossil vehicles sales dropping by 13% year over year in the last quarter, EV sales actually went up by almost 120%, and that's with them only making about 5% of the sales, so there's still a ton of room for growth. In fact, China makes up around 40% of all global EV sales and is still growing faster than really anybody else out there, and that growth is expected to continue well into the future, given that EV sales are projected by analysts to surpass traditional ICE vehicle sales in the not too distant future. So the fact that NIO operates in this market is definitely a positive, even with the recent EV subsidy cuts, which, by the way, I actually do think that those cuts will discourage many of the EV startups in China that aren't even putting vehicles out on the road, and ultimately I think the market will favor more advanced and innovative companies like Tesla and perhaps NIO that offer better performance for competitive pricing in the luxury EV and autonomous driving markets. But still, I just can't ignore the fact that there is so much uncertainty around NIO, especially in the short term, and even towards the end of the year, we really need the ES6 sales to be positive. We need the seasonality to go from being a headwind into being a tailwind, and we also need the Chinese economy to see some improvements and hopefully a trade deal between the US and China, and that could potentially help NIO in some pretty big ways. But in the short term, again, I just don't see a lot of positivity surrounding the stock. Now, a lot of you have been asking me about my position and how it's affecting my portfolio, so I'll just quickly address that. Well, looking at my stock market portfolio, as you guys know, I've mentioned this before, less than 10% goes to long-term spec plays, and what I mean by that is long-term gambles. So instead of like going to the casino and gambling in Vegas, gambling in some casinos, I'd rather put some of my money, a very small amount, into some speculative companies that maybe are not profitable, but they have a lot of growth, or maybe they have a lot of future potential. So maybe they're kind of high risk, but maybe also high reward. But that's only less than 10%. About 90%, over 90% of my portfolio goes to very safe stocks like Microsoft, Amazon, Disney. Like if those stocks were, like if those companies went bankrupt, then my portfolio would take a devastating hit. But we're looking at just the 10%. And by the way, this is not even including cash. If we included cash, it would be even less than 10%. But less than 10% goes to these spec plays. Tesla makes up around 4% of that. NIO makes up like 3 to 4%. And then 2U makes up less than 1%. Now, as you guys know from my previous videos, when NIO stock was taking off and it was like above $10 a share, I was cashing in some profits. And when it was crashing and reaching some of its lowest levels, that's when I was adding to it very slowly in small amounts. So I've really averaged down quite a bit. I was adding to it, but because the stock was dropping, it kind of balanced out, and I'm still only at around 3 to 4% of my portfolio. But I've averaged down to the $4 range. So I'm around $4 a share on NIO stock. And don't get me wrong, I'm still down huge on my position. I'm down over 25%. It's probably like 30% by now. But because it only makes up like around 3% of my portfolio, that means that my overall stock portfolio only took a hit of about 1% because of NIO so far. So, and I can lose like 1% in just a bad trading day in the market. So it's not really, that's like not a big deal to me at all. But if you're asking me if I'm adding or selling any of my position right now, I just kind of want to hold it because I'm comfortable with the position I have. Again, around $4 a share. It's about 3 to 4% of my portfolio. I don't really want more exposure to it because I don't see any positives in the short term, but I do still think that there could be some long-term potential, especially in the Chinese EV market. And I think NIO could be a decent speculative play on that Chinese EV market. And so that's why I kind of just want to hold my position, but I don't really have any reasons to make any changes to it. So anyway, I hope that kind of answers some of your guys' questions. If you have any more, leave them down below. I don't give a lot of specifics because that's kind of private information, and it's the internet. I don't like everybody out there who I've never met to know everything about me and about my portfolio. So but I'll give you that information. That's kind of enough. But anyway, I hope that you guys enjoyed the video. If you have any questions, suggestions, leave them down below, and I'll catch you guys in the next one. Stay safe out there. I know the whole trade war is really dragging down the market, and by the way, unprofitable speculative companies like NIO always get hammered much worse than the rest of the market during these times. So that's kind of another negative for NIO. But anyway, that's how I feel about it. Let me know what you guys think. I'll catch you guys in the next one. Take care. Bye-bye.